Good morning, this is Market Meridian. Most of traders say today is not a good day to trade oil and gold. Today is April 20th, 2026. I am Eric. If you checked your phone in the last 90 minutes, you already know what's happening. The global hard commodities market is blowing up. And no one on mainstream financial media is telling you the full truth. Today, we're breaking down exactly why this market is broke. It's pricing in the single most important energy choke point on planet Earth. Every single day, roughly 17 million barrels of oil, that's 20% of global supply, passes through this narrow 39-kilometer waterway, right between the United States and Iran. Tensions here are not new. But right now, we're seeing the kind of military posturing and market reaction that even seasoned traders haven't seen in years. The risk of shipping closures, attacks on energy infrastructure, or outright blockade is no longer a tail risk. It's being priced into the market right now. And the result? Oil is surging 7% in a single session. Not 2% or 3% to 7%. Institutional buyers are flooding into long positions en masse, and the supply shock is only getting worse as Middle East tensions escalate. Second, the inflation shock that no one is talking about. This is the secret driver behind everything. When geopolitical risk hits, the first reaction is always inflation. A 7% single-day rally in crude oil is not just an energy price move, it's an immediate, global inflation shock. Oil is the backbone of the global economy. Every single dollar higher in crude means higher gasoline, higher diesel, higher shipping costs, higher production costs, and permanently sticky inflation across every major economy. That changes everything for central banks. This weekend, the market's pricing of 2026 Federal Reserve interest rate cuts has collapsed. We went from pricing in multiple rate cuts to now pricing in zero rate cuts. And even a risk of additional hikes before the end of the year. Higher for longer is no longer a buzzword. It's the market's new reality. That's why assets like gold are moving today, not just as a safe haven, but as a hedge against the inflation shock that's being forced onto the global economy right now. Third, massive institutional flow rotation. $billions of institutional capital is moving right now, and it's creating the kind of volatility that crushes retail traders. Hedge funds and large money managers are exiting the long positions they've built in gold over the past month, and reallocating directly into crude oil and energy commodity positions. Simultaneously, bond traders are completely stopped out of their positions. The momentum is accelerating, and the US dollar is adding additional bearish pressure on all dollar-denominated commodities. This perfect storm of drivers is creating the classic buy the rumor, sell the fact chaos we've seen before, but this time, it's not just Middle East tensions. It's inflation, it's policy, it's capital flows, all colliding at once. That's why the market is broken. It's not one story. It's three structural shifts hitting at the exact same time. Before you place a single trade today, you need to know the key levels. These are not random numbers, these are the institutional support and resistance zones that are making or breaking this move. First, let's start with WTI crude oil. Current price as of this session, $87. $0.98, up over 6.5% on the day. Let's go through the critical levels you need to watch. Key resistance levels, upside targets. Immediate hard resistance, $89. This is today's session high. If we break above this level with volume, The next leg higher is already on next major resistance, $92.50. This is the 4-hour congestion zone that will act as a major wall of sellers. Bullish breakout target, $95. This is the critical psychological level that will trigger the next wave of institutional buying. Extreme bullish scenario target, $98.20 to $100. This is the long-term upside if the Strait of Hormuz situation escalates further now. The downside protection, your support levels, immediate dynamic support, $86. This is the first major pullback zone. If price breaks below here, we could see a quick retest of the next level. Strong buy zone support, $83.50. This is the gap fill from earlier in the week, and the primary institutional support, trendline defining major support, $80. If this level breaks, the entire bullish structure fails, and we're looking at a full correction, invalidating support, $78. Below this level, the bullish thesis is dead. Current technical bias, extremely bullish right now. The parabolic trend is strong on the 1-hour and 4-hour charts. But here's the catch, the risk of a violent sharp pullback to take profits at these price levels is extremely high. Next, spot gold, XAUAUSD, current price, $4,759.47. Now, and it's critical you understand why. Key support levels, immediate support, $4,750.50. This is today's session low. If we break below here, the next level is coming fast. Critical major support, $4,700. This is the line in the sand for bulls. A bearish next target, $4,700. If $4,700 breaks, this is the next stop. Long-term major support, $4,650. This is the level that would invalidate the recent bull run. Key resistance levels, immediate hard resistance, $4,800. The psychological round number, and the first major wall, primary rejection zone, $4,830. This is where sellers have shown up repeatedly. Trend flip resistance, $4,860. Only a break above this would signal a trend change. Current technical bias, bearish, right now. Price is falling hard intraday, and remains in a strong bearish trend. Any relief rally is likely to be sold into, as capital continues rotating out of gold and into oil. And finally, spot silver, XAG to USD. Silver is seeing an amplified version of gold's move, with even higher volatility. Immediate support at $78.60, next major support at $77.50. Major resistance at $80.50 and $82. If you're trading silver today, expect wild swings. This is not for the faint of heart. Part 3, why today is extremely dangerous for unprepared traders. 3 minutes, let's be clear, today is not a normal trading day. If you're not prepared, this market will take your money in minutes. Here are the 5 critical risks every trader needs to understand right now. First, extreme. Gap risk and headline volatility. Crude oil is moving 7% in a single session. That's the kind of move that creates massive gaps and zero predictability. One headline, one news flash, and the market can gap 3 to 5% in minutes. There is no safe level to hold a large position overnight today. Second, overbought, oversold extremes. Crude oil is the most overbought it's been all year. Gold and silver are primed for a violent short squeeze. This means we're set up for sharp counter-trend corrections that will catch every single trader on the wrong foot. Third, leverage is a death trap today. If you're using full leverage today, you're gambling, not trading. Even if you're right on the direction, a 3% whipsaw can blow your account out before the main move even plays out. Fourth, fake breakouts are everywhere. Today, you will see dozens of false breakouts and fake breakdowns. Retail traders will get trapped on the wrong side of the move, over and over again. Do not chase candles at all. Fifth, liquidity is fragile. Market depth is extremely thin right now. Massive stop losses will not execute at your expected price. This is not the day to use aggressive position sizing. Let's cut to the most important part. What do you actually do today, based on your trading style? We're breaking this down for every type of trader, so you know exactly what to do and what to avoid. First, day traders, intraday only. No overnight holds. What you should do: never chase the absolute top in crude oil. This is the number one mistake right now, down to volatility. Use 1.5% to 2.5% stop orders. No exceptions. On gold and silver, look for short entries on relief rallies. Focus only on defined risk setups. No hope trades, take partial profits at key levels. Lock in gains as you go. If you're not sure, don't trade. This is not the day to guess. What you should not do: hold any position overnight, add to losing positions, trade without stop losses. Go all in on any one setup, trade on emotion or revenge trading. Next, swing traders, 2 to 7 day holds. Your playbook today on crude oil: if you're long, trail your stop to $85. This way, you lock in profits if the move reverses. On gold, if you're holding long positions, reduce your size. The risk of a continued drop is high. On silver, use wider stops and half your usual position size. Volatility is extreme. Only enter new swing trades if you have a clear risk-reward of at least 3:1. No exceptions. Long-term investors, for you, the rules are simple. Do not make panic decisions based on today's volatility. If you have existing positions, review your risk management, not your entry price. If you want to add exposure, use dollar cost averaging, not lump sum buys. Stay focused on your long-term thesis, not today's noise. And finally, the golden rule for every single trader today: if you feel overwhelmed, step away. No trade is worth blowing up your account over. This is Market Meridian, and we'll be back with live updates as the session continues. Stay sharp, stay safe. And we'll see you next time. Please subscribe my channel for more instant information. Thank you for watching.